Time now to get a look at what's making news in the markets. And if you're not harvesting, then you might be in the minority. According to the latest USDA crop progress report, corn harvest is at 21%, almost double this time last year. For soybeans, even more, 55% of the crop is harvested, over 40 points up from last year, and more than double the 5-year average. I spoke with Darin Newsom of Darin Newsom Analysis this week to get his take on that and the recent movement in corn and soybeans.
We've had hot, dry weather for the most part, helping the combines to continue to roll. And I think that is what makes these moves in corn, in soybeans, that much more impressive. In fact, that we continue to see solid basis. Basis continues to firm. Despite, and then we look at soybeans with the type of move that we've seen recently, despite the fact everybody wants to sell them. Everybody's selling soybeans up front, and they should be selling them because there's no carry in the future spreads. So, I mean, we are in a full-blown weather market right now in the soybean market, mostly due to the hot, dry conditions in South America. But it's a weather market nonetheless, pushing the market higher, and it just continues to roll.
And you touched on basis numbers for a second, but let's dive a little deeper into that. For corn and soybeans, where do you see that basis going over the next month or so?
You know, the soybean market is interesting. I think it's like national average basis is like something like 58 cents under, 56 cents under, something like that. It's right around average for this time of year, a little bit better than average for this time of year, national average. The thing is, it's not breaking down. And what I'm hearing is that from the most part, yields have been better than expected. As I talk to folks across the Midwest, so we've got a lot of early harvest. We've got yields better than expected. We've got cash sales being made, yet basis is holding together. So this continues to imply, to continue to shine a spotlight on, we've got good demand right now. We've got good demand right now. We're slowly building our supplies back up, but right now demand is outpacing the gain in supplies. We'll see how long this lasts. Usually a weather-driven short supply market tends to last only until the combines start running. Soybeans are going against that trend right now.
And Darin, one final question before we move on to the next topic. With everything that you've said, can you give us an idea of where farmers might want to target sales for corn and soybeans right now?
You know, in the soybean market, you just want to feed it a little bit at a time. So basically, as you're bringing crops in, because when you get in a weather market like this, it's impossible to pick a top. I know there's a lot of folks out there trying to pick tops. You can't do it. At some point, it's just going to hit that tipping point and it's going to come right back down. We just don't know where it is. In corn, it's a little more methodical. Corn likes round numbers. And so we crossed 380 earlier in the week. Now it's got its sights set on 390. Everyone's talking about 4. If I'm going to wait till 4, I'm going to have my order in just ahead of it. I'm going to have it in like at that 399, 399 and a half, something like that. Again, corn likes to hit round numbers, then back off for a while. So I think you can continue to use that method to sell your corn, to get that locked in. You say if you're hedging it, use the D's, then look to roll out to the March. But on the soybeans, again, just look to sell those across the scale as much as possible, because that's what the market's telling you is the best play at this point.
Darin, let's look overseas now. South American weather has not been cooperating for farmers down there. So tell us, how have the markets been reacting to that dry weather, and what are some impacts we could maybe see back here at home?
The latest I've seen is that it's still quite dry in both Argentina and Brazil as they move through planting season and start to head into growing season. So this is not ideal, particularly since over 6 to 9 months of this last marketing year, Brazil had record exports and they really pulled their supplies down, their available supplies down. So the world's largest buyer, obviously China, was looking for Brazil, its main supplier now, to rebuild its stocks. If they can't do it, obviously that's going to turn more attention back to U.S. supplies, which is what we're seeing right now. So as long as it stays dry, as long as this La Nina stays in effect, it doesn't rain, and there's more concern in South America, I think we're going to continue to see soybean future spreads inverted, telling us that there is a concern, and that's going to keep the market supported. It's going to be very hard to break a market, but once it starts raining, if it starts raining, you're going to see this whole thing come tumbling down like a house of cards. I think that would be the logical scenario. So we have to pay very close attention to what's going on. China's paying very close attention to what's going on, because they're still looking to do most of their buying in 2021 from Brazil.
Yeah, because it's important to note that the U.S. is more of a secondary market to China. South America is where they get their primary imports, right?
That is correct. We used to be the number one supplier, and then all of a sudden we were on par. We were even partners with Brazil as far as supplying China. But then, we got into a trade war and other problems, perked up here over the last few years. Now we're a secondary supplier, only with the attention only increasing on U.S. supplies when there's a weather problem. And it just so happens we are seeing the possibility of a weather problem down there. We don't know the production, South American production is going to be cut yet, but it's getting off to a dry start.